I'm joined today by Andrew Gowen, Portfolio Manager and Director of Research at Bell Asset Management. Andrew is among the incredible investors sharing insights at the Equities Investment Forum today. Welcome, Andrew. It's great to have you with us.
Thrilled to be here.
Andrew, you just stepped off stage at our Equities Investment Forum where you were speaking to us about SMID cap equities. In a nutshell, why do you advocate for their inclusion in equity portfolios?
Very simplistically, it's performance. It's sustained long-term outperformance. Over the last 25 years, the data is clear. Small and mid-cap equities have handsomely outperformed large-cap equities. 7.3% annualized for small and mid-cap equities, 6.1% for large-cap equities. And ultimately, that outperformance is underpinned by the fundamentals of growth.
Talk to us about the growth figures that underpin SMID cap equities that support your thesis for their role in driving returns of equity portfolios.
Over any longer term horizon, 5, 10, 15 years, we've seen a persistent outperformance in the earnings of small and mid-cap companies against large-cap companies. Over a 5-year horizon, that's 17% versus 13%. Over a 10-year horizon, it's just over 7 versus closer to 6. And over a 15-year horizon, that's near enough to 7 against, again, closer to 5.5. So persistent outperformance in the earnings capability of small and mid-cap companies over time. And as we know about stock markets, in the very short run, it behaves as a voting machine. But in the long run, it behaves like a weighing machine. And small and mid-cap equities have justly deserved their outperformance over time due to that sustained outperformance of earnings.
If the SMID cap equity outlook is positive, can you explain why SMID cap equities have recently endured a period of underperformance?
Yeah, it's always back to fundamentals. So coming out of COVID, we saw a period of growth for all equity asset classes, and then a correction in 2022. But small and mid-cap equities were slower to reaccelerate. Their earnings didn't reaccelerate until 12 months after the large cap equities. And as a result of that growth hiatus over a 12-month period, the share prices lagged for that same period.
So where does that leave us now? What's to come in SMID cap equities?
Well, we're back to growth. So we saw that reacceleration commence in 2024, and now we're reverting to the norm of that outperformance over time of small and mid-cap equities against large cap. So as we look out to 2026, we see small and mid-cap equities generating earnings growth near enough to 17%, outpacing large caps at 10.5 to 11%. So a reversion to the norm that we see consistently over time. And again, as share prices follow earnings, we will see the share prices of small and mid-cap equities start to outperform in line with that earnings.
What are the key risks for equity investors to consider in the current environment from either an industry, growth, or geographic standpoint? And how are they likely to impact the SMID cap segment?
Yeah, one of the main risks that we identify and we hear a lot in markets is about the extreme concentration we've seen in global equity benchmarks, and particularly that's large cap benchmarks. Typically about half of those benchmarks is comprised of just 2 sectors. The top 10 stocks is 30% of that benchmark, and the US is 3/4 of the benchmark. These specific and extreme concentrations are just being exacerbated by passive flows now. And of course, small and mid-cap equities has a much more diverse benchmark. You see the top 2 sectors being only 25 to 30% of the benchmark, the top 10 stocks less than 3%, and the US being 55, 60%. So I think small and mid-cap equities will benefit from the diversification that all risk managers will require over time due to these extreme concentration risks in large cap equities.
Thank you, Andrew. We're going to need to leave it there and get back to the forum. I really appreciate you sharing your expertise with us today and for being a part of Global Investment Institute's Equities Investment Forum.
No, thank you for having me, Zelda.